Good evening, everybody, and welcome along to this IC Markets webinar. We are going to be talking about Forex. Where's Waldo? Finding the hidden Forex and metal gems. So welcome along, everyone. My name's Chloe. I'm with Trade with Precision, and I will be with you for the next hour. We're going to look through the Forex and the metal markets. Before we get started, just a quick request. If you could just pop into the questions box and let me know that you can hear me okay and that you can hear my screen okay, that would be fantastic. And we will just spend a couple of moments reading through this next slide, which is the risk disclaimer. So if you could just have a look at this slide, take a quick read through, make sure you agree with everything therein, and then we can get started. Okay, that should be enough time to have read through that. So a little bit about myself before we get started. I'm a trader based in London, and I trade predominantly in Forex markets, also commodities, indices, and other leveraged markets as well. I'm a technical trader mainly, and I am a trend-based trader. That is very similar to the majority of traders with Trade with Precision. We are predominantly technical traders and trend-based traders. So as we go through the webinar, please do let me know if you have any questions. Of course, I'll do my best to answer as many questions as I possibly can in the time that we have. And of course, if there are any markets that you particularly want me to cover, then drop those into the questions box, and perhaps at the end we can go through those as well. So the agenda for today, we're going to do a quick market overview of the Forex and precious metals markets. Thanks, James. Yep, I absolutely, definitely will be looking at gold. One of the most traded of the precious metals, so definitely won't miss that one out. We're going to be looking at key trends, patterns, and potential trades that might be setting up. And we're going to talk about building a watch list for the current climate. So without further ado then, let me just bring up the bear with me while I just bring up the platform here. Okay, so a little apology as well if there is any background noise. I've got a 19-month-old toddler who's just going to bed and it's often quite noisy, so apologies if any of that sound leads through. That's the perils of working from home. It has a lot of benefits, but a lot of dangers as well, and that's one of them. Okay, so someone mentioning they can't hear anything. I believe that's probably their end rather than mine, but bear with me while I just answer very quickly. Thanks, Alejandro. Okay, let's get to a few of these questions. Thanks, guys, for your feedback. That's fantastic. I think it must just be someone who's got a problem on their end. So, as a trend trader, my thoughts on where gold may go this year, i.e. 2000 plus, as Goldman predicts. Really, really good question. And yes, I definitely will talk about gold. I'm going to start off with the Forex markets first of all. So when I'm doing my market analysis, I always start off with the monthly time frame. The reason I do that is because horizontal levels of support and resistance are key to my trading. Yes, I am a trend trader, but horizontal levels of support and resistance are useful not only to help find entries and exit points, but also to draw a kind of roadmap so that I can start to try and predict where I believe price is going to go next. Because if I can't work out where I believe price is going to go next in any particular market, then I shouldn't be trading that market. I've got to have an idea of where I think price is going, because I have to have belief in the direction I've picked so that I can have belief in my strategy, belief in my trade. And that is what triggers me to place my capital at risk into the market. If I don't know where the market's headed and I'm just guessing, then I don't want to be risking my capital. So I use the monthly time frame predominantly, and also the weekly time frame, to draw myself a roadmap of where I believe price may go next. And of course, I cannot predict where price is going next with 100% certainty. No one can. But I can build myself a roadmap of where I believe price is likely to go next, and I can trade according to that. So here on Euro Dollar, this is the monthly time frame now, and I've got a few horizontal levels drawn in based on the monthly time frame. Let me just squish it up a little bit for you. So what is most important to me is this horizontal level of support right now. I say most important to me at the current time is this horizontal level of support here. It's around 1.05 on Euro Dollar. Now that is a strong horizontal level of support. Price has barely been below there since, for almost 20 years. Price has not been really below that level. It has dipped below. So just here we can see the tails of these candles from back in 2017 and one here back in 2014. They have just dipped below this level, but price has not closed on a monthly basis below or really properly traded below this level for 20 years. So this is a strong horizontal level of potential support. The reason it's so relevant to me now is because price has just bounced from this level. What I also want to point out is, so yes, price has just bounced from this level. Where might it head next? Well, I have this level slightly above price, which I'll show you on the weekly time frame next. It makes a little bit more sense. I've got a few more levels drawn in here as well that you can probably see where I've plucked those levels from. Horizontal resistance up here at around 1.16, 1.145 as well. Let's look at the weekly time frame, and we can see more clearly the relevance of those levels. So price basically for the last 5-7 years has been pretty much in a wide range between these levels. This upper level around 1.23, the lower level at 1.05, and price has spent a lot of time in a tighter range, which we can see here between the lower level of 1.05 and this level up here, 1.16 or thereabouts. Price has spent a lot of time from 2015, 2017, and a lot of time here as well within this range. So is this tradable? Well, yes, it is tradable. Ranges are tradable because a range on a high time frame will look like trend on a lower time frame. So while I'm doing my analysis on a monthly and weekly time frame, that's giving me a roadmap as to where I think price is likely to go next. I can then drill down to a lower time frame to see if I can find a trend trading opportunity that takes me from where price is currently to where I think it's going next. So within this area, there have been trends, and most recently, there has been a pretty strong downtrend on euro from the peaks up here, close to the high, the 1.23 level up here, all the way down to the bottom, the 1.05, that strong level of support. Price has come all the way down to there. Now, price has reacted strongly at that level. We can see here on the weekly time frame, we've had 2 strong buying weeks since price hit that 1.05 level of support. Does that mean that the trend is over, the downtrend is over on US dollar? Not necessarily. It doesn't necessarily mean that trend is over. Of course, it's possible for price to come down lower. What does it mean for traders? A couple of things. First of all, I don't want to be trading down into that level because that level is likely to act as a level of support. And if I trade down into that level, I am likely to only manage a low reward to risk trade or even get stopped out of the trade. So I don't want to trade into that level. What I would say is, if price does come down below this level and trade below and pull back perhaps even to that level, I would be happy to trade short. So once price gets below that level, then I would be happy to continue trading with the downtrend if that happens. For now, price has pulled back to another horizontal level here that is basically just this previous low. Last time price changed direction at this level, it went from a downtrend to an uptrend at this level. So this level is an area that both buyers and sellers are likely to be looking at, and there's the potential for sellers to come back into the market at this level, push price down, and perhaps lead to this downtrend continuing. Now, on the daily time frame, we can get a clearer idea of what's actually happening with the trend. And currently, the pattern on euro dollar suggests to me that price could actually end up pulling back up further rather than continuing the downtrend. Now, it remains to be seen. What I can say is I'm not going to be trading here because that's not enough reward to risk for me. If I were to enter a trade on a daily time frame, my stop loss might be somewhere up here, my entry might be somewhere down here. There's barely a one-to-one reward to risk before that strong level of horizontal support. Does that mean I definitely don't think price is going down there? No. It's possible that price could head towards that level again, but I won't be trading it because I'm looking for higher reward to risk opportunities. I might take a trade that is a one-to-one reward to risk, but I certainly would like to aim for more than that. One-to-one reward to risk for me is almost like a worst case scenario. I would rather aim for 2-to-1, 3-to-1 reward to risk when I'm trend trading. The whole point of trend trading is that price moves further in the direction of the trend than it does against the trend. So we want to capitalize on that and make sure we're aiming high for these trades, by which I mean don't trade into levels of horizontal support and resistance. There's the possibility now that price could come down to this level and below, and if that happens, then I'll be looking for a pullback and another entry below that level. The other alternative is price could now come back up, and we could actually see this as potentially the end of this downtrend as we see it currently, because of the strength of this horizontal level here. Now, if price does go up here, then really the main horizontal resistance level I've got here is 1.145. That's the top of, not the very top, but the top of where most of the price action happened within this range. There's been a lot of support, a lot of resistance at this level. And so if price were to break back into this range from down here, then I would anticipate price potentially heading back up to the top of that range. Now, if that were to happen, then on a lower time frame, this is the daily time frame here, on a lower time frame such as the 4-hourly or hourly, there may be trend that can be traded. Right now, I can't trade the trend on the 4-hourly because we are approaching this 1.08 level, which is also a level of resistance. So if price were to get above that level, then I would be looking for potential long opportunities on euro dollar. So it's a bit of an either or situation. The predominant trend currently is down, but this horizontal level here of support at 1.05 fills me with caution. I don't want to trade into that. What I would prefer to do is wait for price to break down below that level if I want to continue trading short, or if price is going to turn around, I'd like it to get back above this horizontal level of resistance here, 1.08 or thereabouts. It's this previous low level, and then I would be looking for potential long opportunities on euro dollar. Moving on to cable. Cable very similarly has a strong level of support here, down here on the monthly time frame at around 1.2. Now, price has hardly been below that. As far as the history of this market that we have available, price has not been below this level, apart from right here, which is, let's just get that so that I'm not wrong. That is the just when the coronavirus pandemic was happening, and price did dip below there, just slightly. It didn't close below there again, but this is a solid, strong level of potential support. Now, going down to the weekly time frame, I can see a few more relevant levels just here. So there's the strong level of support. There's where price just dipped below very briefly. We've got another level here, which has been resistance, support. So that is a level that I'm looking for price to return to now, currently. Still in a downtrend on the weekly time frame. Is it possible that price could reach down to this 1.2 level? Absolutely, yes, it is possible. What I believe to be most likely to happen at this current moment in time, because of the fact that we have what looks a little bit like an inverted head and shoulders pattern. So there's the left hand shoulder there, there's the head down there, and then a right hand shoulder just here. It's not a perfect pattern. This neckline here, once broken, could send price back up to the certainly up to this next horizontal resistance, but perhaps even more likely a little bit further up to around the 1.3 area. Of course, then price could come down, and perhaps then it will have another attempt back down at this 1.2 level. So either one of these horizontal levels, price could have an attempt up at. This first one here, this first level around 1.27, this corresponds with this strong previous low, and it is a horizontal level that is reasonably well respected in the past as well. And the 50 moving average on the daily time frame, by the time price gets up to that level, that 50 moving average could have moved down far enough for there to be a bit of an area of confluence there. So that's something that I will be looking out for. If price does make it further up, then of course I'll just be looking for reversal at that next level around 1.3 instead. Now, is it tradable? If price moves up from here, is it tradable? Well, I would be cautious about trading into that 1.27 level of resistance, and I would in fact be cautious about trading long while price is below all of this bunch of moving averages here, especially below the 50 moving average on the daily time frame. However, once it gets through all of that, then absolutely yes, I can go down to a lower time frame, such as the 4-hourly, like we discussed on the euro. it looks like there's a decent bit of trend happening there on the 4-hourly. So as long as I'm not trading into any levels of resistance, so once price is through this level, then absolutely I would be happy to trade long up to the next level of resistance there. Okay, question from James. If myself and many traders believe this is the most likely scenario and many traders are long, do I believe that banks and large institutions are capable and would manipulate the markets to take out all long traders? That's a good question. Now, bearing in mind that the Forex markets, I forget what the actual number is. Is it now something like $5.4 trillion traded every day in the Forex markets? So, I mean, that is a huge, huge volume of trading. It would be very difficult for individual banks and institutions to be able to manipulate the markets. The things that move Forex markets are economies, central banks, interest rate decisions, you know, major economic news and central banks. So just the regular banks and large institutions, hedge funds, I would say probably have limited power to manipulate the markets. That's not to say it doesn't happen, and certainly on lower time frames where you're looking at having tight stops where a small move may take your trade out, then yes, it's something that you might want to be aware of. But I personally, I would prefer to trade what I believe without being influenced by, am I worried about my stop hunting and things like that, you know, because the idea is to have a strategy that has a certain percentage success rate. You know, if you've got a strategy that has a 60% success rate and that's back tested over a period of time, then that's really all you need. That yes, you'll lose 40 out of every 100 trades, but those 60 that winning trades are what will give you your positive equity curve. How do I get the resistance or support level? Apologies, I haven't actually covered that. I'm just coming to this side panel here, and it's the 1, 2, 3, fourth one down. I hover over that, and it gives me this pop-up menu. And then the second one down here, horizontal line. I just click on that, and then I can click and hold and drag and drop a horizontal level wherever I want to on the chart. Once I've dropped it, I'll have this box here where I can change the thickness of the line. I can change the color of the line. I can change, oh, that doesn't look so good. I can change the settings here, so I can set the line at a specific level. So, for example, if I wanted this line at 1.25, I could just set it there and it'll move up to 1.25. So that's how I do that. Let's move on to dollar Swiss. Now, dollar Swiss, quite a lot of close together lines because it does tend to move between the horizontal levels pretty accurately. That's dollar Swiss. I believe the webinars are recorded, yes. So if they are not sent to you in an email, then drop an email to the customer service. I'll give you the contact details at the end, and they should be able to help you out. But yes, the webinars are recorded, I believe. So dollar Swiss on the monthly time frame. So far this month has been bearish. We've reacted strongly against this horizontal resistance level here, which is around the $1 mark. 1-to-1, very, very strong psychological level. And we can see here that it held up as support for quite a while here. It's been resistance quite frequently. and price has reacted at pretty much that level. It's just popped above, but pretty much that level just recently. Now, that has given a pretty deep retracement on the weekly time frame. That doesn't mean to say that this is a downtrend. In fact, this retracement, it could come down even further. It could come down to this horizontal level here where this previous high is 0.945 or thereabouts. So it could even come down a little bit further. But actually, if we look at this on a daily time frame, there is this area of support here. We've got the 50 moving average, which I don't like to refer to as an area of support, but we do have support anyway, horizontal support around this area. So there is the chance that price could actually bounce from this point. We've had a decent retracement. The sellers have really taken over this market over the last few days, a couple of weeks, and this is the area where a decision point could be made. Are the buyers going to come strongly back into this market, in which case is the uptrend going to resume, or do we have more move to the downside? Either could happen. This would be an area that I would be looking for the buyers to come into the market. If the buyers don't come into the market at this point here, then I would be considering trading short on the intraday time frames. It's just this level here. We can see that we've got some consolidation here at this level. So I would have to wait for price to break below that level and pull back, retest, cyclicity to resume. I've got support here that I need to see broken before I can trade short. The moving averages that I have on the charts are, and these are just personal preference for me. I've got the red moving average is the 50 moving average, blue one is the 20, black one is the 10 moving average. Of course, depending on the strategy that you're trading, will influence what moving averages or what other indicators you need on your chart. But let's go to dollar CAD. Now, dollar CAD, again, it's just hit this level of resistance here. This is the monthly time frame. It's just hit a level of resistance around 1.29. Let's go down to the weekly time frame. We can see this level of resistance has really caused price to struggle here. It hasn't quite made it all the way up there each time, but we've really got price ranging at the moment up to this level. It's pulling back currently. On the daily time frame, there isn't much trend to be seen here. Now, as a trend trader, it is my job to trade trends, and by that I mean really rinse them. It is my job. The markets don't trend all of the time. In fact, they trend something like 30% of the time, I think. So with a trend trading strategy, what I need to do is make my money, I need to make my income for the year during those months where the markets are trending. And I need to maximize my profits during those times, because what I don't want to be doing is giving my profits back when the markets aren't trending. Now, a really good example of this, in fact, I'm going to skip past dollar CAD and go to Dolly Yen. A really good example of this. This is the monthly chart on Dolly Yen. Let me just show you the daily so you can see this trend. Now, here, I am not trading. I am not trading this market. So all the way through from basically end of October, all the way up to March of this year. So 5 months, not trading this market at all, and never entered a Dolly Yen trade at this time. I was keeping an eye on it because I was looking at the consolidation and waiting for the consolidation to break. This is where I make my money for the year. Now, if I don't make my money for the year during this period of time, so from March through all the way up until end of April, if I don't make my money then, then what that causes me is stress, and I need to now make my money here potentially. And what I'm going to do is I'm just going to give money back to the market. It is my job as a trend trader to identify trends ahead of time, identify potential areas where trends may start, be prepared and get into them at the beginning, get into them again and again and again on lower time frames, and daily time frame is fine, but there are plenty of entries here on the lower time frames. Stop trading when the trend is over, and what do I want to say? Not count my chickens, count my money, sit on my hands. I don't want to give the money back during the period of time when price is not trending. So the fact that I open this dollar CAD chart here and I can't tell you where price is going to go next just means I'm not going to trade this chart. I can tell you I think it's going to go down. I think it is going to go down, but I can't tell you where to, and I can't tell you with any degree of certainty. So I simply move on. That is not on my watch list at the moment. Dolly Yen. Now, this is a really good example of a price pattern that is worth looking out for. This is an ascending triangle pretty much here. Higher lows and the same high, pretty much. Higher lows up here, the same high across here, ascending triangle. The closer it gets to the apex, the more likely it is to break out, and the more strongly it is likely to break out. And that is indeed what happened, and that was the start of nearly 2 months of trend. Now on the lower time frames, let's just have a look at the 4-hourly. Plenty of opportunities into this. I don't have time to teach you a strategy right now, but even if we were doing something as simple as buying each time price reached the equilibrium area around the black and the blue moving averages, all of those would have been winning opportunities until we get to here. And then again over here. And so on. So where I mentioned I'm aiming for at least 2-to-1 reward to risk, that's how many, that must be at least 10 2-to-1 reward to risk trades for the 1 or maybe 2 losing trades at the end. So right now on Dolly Yen, where is her price headed? Well, this interests me greatly actually, Dolly Yen still, because technically I don't see a reason why price should necessarily or why the trend should necessarily end at this point. There is no horizontal level of resistance here. The next horizontal level of resistance is up at 135 up here. That's this previous high over here. That's where when this trend started, I believed that price was headed. Now, it might not make it up there, but there is the possibility that it could. Now, there is the possibility that it could, first of all, pull back. It is due a pullback. It could pull back all the way down to this level of what was resistance could now become support here. And if it does that, then we've got a little bit further to go on the daily time frame, more to pull back down here. It could alternatively just continue from where it is. This is a pretty reasonable pullback now. It could continue from where it is and still make it up to this 135 level. So I'm still bullish on Dolly Yen. I'm not pressing the buy button right now, but I am still bullish on Dolly Yen at the moment. I do believe there is potential for it to continue upwards, and if it does, then I'll be looking for those long entries on the lower time frames and hoping for more trend like the trend that we saw in March and April. If it pulls back down to this level here, then there is the potential, and bearing in mind that this chart pattern here, I mean, it's not a particularly clean chart pattern, but we could see that as a very messy head and shoulders. Now that price is beneath that neckline just a little bit here, if it heads below there, and especially if it pulls back and retests, then there could be some short trading there on the lower time frames as well. but my overall bias on Dolly Yen is currently bullish. Okay, questions here. How do you know when buyers enter the market? Good question. I look at candlesticks. So very simply, green candlesticks are where buyers have dominated the market. Red candlesticks are where sellers have dominated the market. So how do I know when buyers are coming into the market? Well, I need to see a green candle basically, but it has to be in context. It has to be in the context of a strategy. It has to be in the context of a price or an area that I want to get into the market as well. Question, can you do scalping on trend? I do not scalp. Can you do it? Yes, of course, anything is possible. Can you do scalping on trend? Yes, you can. I don't scalp. It carries too great a risk for me. A lot of people come to trading, especially Forex trading, with a get-rich-quick mentality, and I believe that that is really what scalpers are after. They're after some kind of get-rich-quick miracle. As a professional trader, this is my bread and butter, my income, and for that reason, I need to manage my risk very, very, very carefully. So no, I don't do scalping. When do you protect your trade on break even? Another good question. I'm not sure I'm gonna have time to get through all of these questions. I'll do my best. It will depend on your strategy. So again, I don't have time to teach you a strategy right now. What I can do is I can give you an example. So let's just say that I've seen this uptrend here, and I want to enter when price reaches this equilibrium area. This is the 10 and 20 moving average here. So I'm in an uptrend, price has pulled back. I want to enter here. I see the green bar, so I see that buyers have come back into the market. So I want to say if price continues upwards above this candle, I want to be in. I believe that the trend is going to continue. I want to be in. So there's my entry. I've drawn a little brown line there. Now, if that's the case, then if price then comes back below this area of equilibrium, below where I decided the low was, bear in mind a trend is a series of higher highs and higher lows. So each time I trade, I'm trading with the belief that it's the low. I believe that's the low, I believe that's the low, I believe that's the low, therefore I'm buying. So here, I believe that this is the low here, this area here. Therefore, I'm going to buy. Now, if price comes down below this, then I was wrong. I was wrong about my belief that that was the low. Therefore, I don't want to be in the trade anymore. So if price comes down here below this point, I don't want to be in the trade anymore. So that is where my stop loss goes. That is where my stop loss goes, which means if I get entered into the trade and then price comes back against me, I lose that trade. The trade is closed automatically. And I do that for a predetermined loss, a proportion of my account. For me personally, it's 1% of my account. I never risk more than 1% of my account on any one trade. So if price hits my stop loss down here, I automatically lose 1% of my account. For break even, which was actually the question, so my stop loss is here, that's minus 1%. Break even would be 0. So I've entered the trade here. I wouldn't get out at break even. If price comes up here and then comes back down to break even, that's fine, because that's all cyclical price action and that can happen. But what I can do is I can scale out of half of my trade when price gets to 1%. So when price gets up here, so when price has moved the same distance as the distance between my entry and my stop, when price has moved the same distance, if I close half of my position, then I still can leave the rest of the position open to make profit. But if price comes back down, to hit my stop loss, I either come out at break even if I've moved my stop loss by that point to break even, or I lose that half of the trade, but I've taken half of the profit, so I would even be break even if price came all the way down to hit my stop loss down here, if that makes sense. More questions. Jahir, I would just urge you to exercise caution, because when I hear of those kinds of profits within a week, don't forget that this is a highly leveraged market, so you can also lose that much within a week. Scalping is very risky. Okay, let's move on then. Kiwi Dollar. In fact, I'm going to rush through the rest of these currencies because I do want to get onto the metals as well. Kiwi Dollar, here we go. Here is my horizontal level of potential support at 0.62, and it's exactly that level that price has recently bounced from. That's on the monthly time frame. On the weekly time frame, we can see that we are in a downtrend and price is headed back up. Now, I believe that it's possible price could get back up to this previous low level here. Let's look at that on the daily time frame. So again, on the daily time frame, there could be a little bit more upwards movement before price returns to the downtrend, and it might be actually that if we get that further upwards movement, that would basically be a 100% retracement of this last move here. So then I'm starting to think the likelihood is that perhaps we could get a higher low and price could come into this range. Perhaps it could start trending upwards, or it could just start ranging. So I've got to be a little bit careful about that. But right now, I'm waiting to see if price is going to return to the downtrend, or if it trades up here slightly more, in which case I won't be trading unless price breaks through this horizontal level, in which case again it'll be down to the lower time frames such as 4 hourly or below in order to capitalize on the uptrend, but only once price gets through this horizontal level, because I don't want to trade into the horizontal level. And good, yes, very good point. Yes, if you're scalping, then obviously you're scalping using a small account size. If you are trading for a living and your account size is larger, then you need to be a lot more careful with your risk. My advice would be, trade a small account as you would trade a large account, because that's the only way you will actually be able to scale up your trading and make those higher profits. Aussie dollar. Okay, Aussie dollar has also hit this horizontal level. It's around 0.7. This is the monthly time frame again. It's just hit this horizontal level and bounced from it. Weekly time frame, I mean, it does show lower lows. I wouldn't call this a downtrend, and I would say that in my opinion, this is more likely to start ranging between this 0.7 level that it's just bounced from, and perhaps the next horizontal level up, 0.73, around about that level. That's a reasonably strong level of resistance, so price could be headed back up there. If it does go back up there, then of course it might be possible to see that as an uptrend on the daily time frame. It certainly might be possible to see that as an uptrend on one of the lower time frames. It's already starting to look quite bullish on the daily time frame with this steep retracement. It's come well beyond our my equilibrium area, the 10 and 20 moving averages. So I believe that price is more likely to move up from here, and I'll be looking at the lower time frames. As long as price stays above this horizontal level of what has been support, could now be resistance, but we're just waiting for price to break above. As long as price is above that, then I'd be looking for long opportunities. So now looking at the precious metals in just the last 15 minutes that we've got. So going back to the earlier question about gold and where do I believe it is headed, it's an excellent question. Now, fundamentally, there is a strong case for gold to continue upwards. Fundamentally because, you know, gold is seen as a risk-off kind of currency. People who are taking risk out of the market and looking for somewhere to put that investment tend to, or can tend to, put it into gold, because gold, as well as being a tradable market, it is actually a thing. It's a tangible thing. You know, people can buy and sell gold, make jewelry out of it, electronics, all kinds of things. So there is an intrinsic value with the asset. And that is why it's often seen as a safe haven currency. Now, with what is going on in the world right now, with just coming, or hopefully coming out of the 2-year-long coronavirus pandemic, unfortunately just going into the war between Russia and Ukraine, you know, there are a lot of reasons why people are quite jumpy in the markets and looking for somewhere safe to have their money, and that is why, or one of the reasons why, we see gold still going up in price. Now, technically, do I believe it can go higher? Well, yes, absolutely. Right now, this is the monthly time frame again. So you can see here where I've got these horizontal levels from the previous all-time high from 2011. That is drawn in here. It's around 1918. After that previous all-time high, there was a kind of triple top here. That level there, around 1,800, is also very, very significant. So those are my two most significant horizontal levels to me at the moment on the monthly time frame. If we then go down to the weekly time frame, we can see the more recent price action. So back up to 2,000 is not beyond the realms of possibility. In fact, it's not even that far. Price would, in order to get back up to 2,000, price would have to break again up through that previous all-time high from back in 2011, 2012, which is just here, this 1918 level. But it has broken several times through that level in the last year, so that doesn't concern me too much. Do believe there is the potential for price to head back up to 2,000 and potentially beyond. I don't see any reason fundamentally why price shouldn't breach the all-time highs. In terms of technicals, what am I waiting for? Well, right now, there is gold right now is trading in between these two strong horizontal levels. The previous all-time high from 2011, 1918, that has proved to be a strong resistance level and a strong support level more recently. This level down here, the 1,800 level, strong support. Price right now is in between those. Is there trend? Well, yes, just about. There is downtrend here, lower highs, lower lows. But really, for me, to take any convincing direction on gold, I would want price to be above the 1918 level or beneath the 1800 level. That's what I see my roadmap as. So in order to trade long here, yes, it could be possible to trade long. And again, I keep going down to the 4-hourly, or it could really be any lower time frame. Yes, as price moves up to that 1918 level, there could be uptrend on a lower time frame, such as the 4-hourly or such as the hourly time frame, or even lower if that's your wish. But the higher probability opportunities, in my opinion, would be above 1918 or below 1800, and that's where I would be really interested in trading either long or short. So it's a bit of a waiting game really for me. I am more interested in trading long on gold, so I will be looking for trend on the lower time frames. I'll be looking for trend to happen on the 4-hourly and perhaps maybe even get an early entry into this, as long as there is a decent enough reward to risk and I'm not bumping my head against this 1918 level. Okay, Eric, this webinar is purely for Forex and metals. I just don't have time to go on to things like cryptos, so I won't be able to look at Bitcoin for you today, even though I do agree it's a really interesting chart to look at the moment. Don't you need large sums to invest in gold? No, not necessarily. You can trade on gold in a leveraged manner, much the same as you can trade on Forex. So you would need a similar account size to trading on Forex. How to guard against fake breakouts on these trims I wait for? That is a really, really good question as well. How to guard against them? Well, that would be to do with having a strong, well back-tested strategy that you trust in. There's nothing I can do about fake breakouts. If there is going to be a fake breakout and I end up getting into a trade there, then that's my bad luck, and that might be my one losing trade for the day or for the week. Generally, though, what I would say is, so let's look at an example here. I've been talking about this 1918 level a lot. So let's say this is the 4-hourly time frame. Let's say that I'm waiting for price to come up here and break through this 1918 level, and then I'll be bullish. It doesn't necessarily mean I'm pressing buy at this level. And for me, in order to protect against a fake breakout, because yes, price could then just come straight back down here. And if we just press buy, then chances are we're risking being stopped out of the trade. What I would wait for is I would wait for the breakout. I would wait for price to come back to that area, and then I would wait for evidence that buyers are coming back into the market at that level before taking a trade here. So at this point here, what I'm looking for is I'm looking for price action in terms of candlesticks. Let me find an example of last time price broke out of this level. Okay, so right over here, this is a perfect example. So over here, I've got my level. This level, don't forget, this level has been here since 2011. So this level was here already in February. I've got an uptrend here, price coming up, cycling higher lows, higher highs, breakout. It's pretty strong breakout there. Price has broken out of that level. Now, if I were to have just pressed buy at that point, chances are I would have maybe lost a trade, depending on where my stop loss was. If I was trading the breakout, my stop loss probably would have been beneath the most recent low, and this spike would have stopped me out probably. But if I were to have waited for my strategy to set up, which would involve price coming back down to retest this level and then buyers coming into the market at this level, what instead happened is price came right back down below the level. So there actually would be no entry for me there. That was a fake breakout, but I wouldn't have entered that. Now over here, we get another breakout, and this time price comes back down to test that level. It exactly tests that level. It exactly tests that level. Let me just blow it up slightly for you. Price comes down and tests that level. Now, there's a bullish candle here, a hammer or whatever it is you want to call that candle. That's a bullish candle. Alternatively, we've got an actual green candle there that could have been used as well. Either way, entry above the candle, stop loss below the candle. That is how I protect myself from false breakouts. And then I'm in the trade. My stop loss is safely down here, and away it goes. Hopefully that answers your question. So there's no way of 100% protecting against them, but waiting for price to break and being patient enough to wait for that pullback before entering protects against the false breakouts. It also means you can miss some trades. That's the payoff. Because if price were to have broken out of here and then just carried on, then I wouldn't be in that trade, right? So it protects against the false breakouts, but it does mean that you can lose some opportunity, you can miss some opportunities. That's when I would go down to a lower time frame to try and still get into that same price action move. I'm very quickly going to cover silver. So silver here, monthly time frame. A few levels that I have drawn in here around 18.5, a level of support here. We can see it's been resistance in the past, resistance past here. So that's my next level of support beneath price. There's then a level of resistance above price around 26. And that was support back here in 2011, 2012. Moving to what is happening with price right now on the weekly time frame, price is looking bearish, and it's beneath all of these previous lows here. So this most recent range of price action has basically been happening since the end of last year. These lows here, that's where price has now broken down below and come back up to retest. So at the moment, I'm actually fairly bearish on silver. So I've got this horizontal level here around 22. Price has broken down below it. All I'm waiting for is for price to come down below this area here. That will show me that the sellers are back in the market, and then I'll be looking to trade short, and I'll be looking to trade short down to that next level around 18.5, just shy of 18.5. Alternatively, of course, price could come back up into this range here. If it does, then the next area I would be looking to head towards would be 26, and I would simply be looking for trend on a lower time frame to trade back up to that area. We have pretty much run out of time. Let me just very briefly take you back to the presentation, because I did promise you the contact details, and here they are. So I hope you found it informative. It's a bit of a short, I feel like it's a short period of time. I'm sorry that I had to rush a little bit at the end there on the metals, but hopefully you've at least got an idea of how I do my analysis and how you can make a watch list moving forward. The contact details here are, they've got a fantastic customer service team. So there's an email address there, support@icmarkets.com. They've also got a phone number that you can feel free to ring if you want to ask any questions over the phone. They've got the usual socials, Facebook, Instagram, Twitter. If you do want to request any specific webinars, any specific topics, then do let them know. Thank you guys for tuning in today. I believe there'll be a quick feedback survey at the end. Would be fantastic if you could fill that in if you have a minute or two at the end. And I do hope to speak to some of you in the not too distant future at another one of these webinars. Cheers everyone, have a fantastic evening.